Before we start, I'm gonna drink my coffee. Just kidding. Let's get to it. The easiest way of trading in 2025 is not ICT, not even SMC, but is the simplest break and test strategy that you can learn for free on my YouTube channel. Now, we're gonna break it down from step by step because it's simple and it's quite basic, and I want you to know that you don't need to complicate things, right? So we're gonna begin with the basics, right? What is actual breakout, right? So the breakout can happen in trend, it can happen in ranges. So you have to understand when is the actual breakout and what is the false breakout. So let's break it down for you, right? Let's imagine that we have a bullish trend, right? We have a low, we have a first high, and then we have retracement to the downside, we have push higher, and we have retracement again, and then we have a push higher. So this is the trending market going upwards, right? We have a first low, we have a first high, second low, second high, third low, third high, right? Now, where the breakout actually occurs. So the breakout occurs when market is trending up and you have impulse movement to the upside that broke the previous high. So this is now the BOS, break of structure. Then we have retracement to the downside again and another impulse movement to the upside, which again we broke the previous high, meaning that it's a break of structure. So this is kind of the break of structure in the trend. Then let's imagine that market goes into the range. So the bullish trend is kind of finished, market goes into the range. You have two options. So what I usually saw, what traders is basically as soon as market stops and they assume it's going to turn down, it's going to, let's say, quote unquote, be a market shift, which is not the case. So until market shows you where it's going to go, you stay put, right? You don't trade ranges. Why would you, right? Ranges are volume, everything. I mean, in ranges, price is going to gain the volume from where it's going to go next, whether this is going to be continuation trend, it can go to the upside, or it can fall down and make a market shift. And this is where you have to be patient as a trader and watch for the breakout, whether to the upside or the downside, it doesn't matter at the end of the day, right? So after every breakout, obviously you need a test of the structure that got broken. So if we go back to the original drawing, we have a previous high, right? So usually market is going to come back down to the previous high, test it, and then continue higher. So this is your point of interest and this is your point where you want to go in, okay? But this is just, one confluence. Like trading, to have a successful trade and have a large probability in the trade, obviously you need to have many more let's say confluences, just like price numbers that I use, fair value gaps, etc., right? But break and test is kind of quite simple and easy, okay? So you just want to see the breakout of, let's say, the previous high or previous low in this case, or you want to see the breakout of the actual structure, okay? Now let's go to the actual situation in the market. So we are currently on GBP JPY 1 hour time frame, and I love 1 hour time frame on GJ. It's so clean, So let's break it down. What we have in front of us. So we have a structure, okay? We have low of the structure and we have a high of the structure. So it's kind of ranging in between for, let's say, almost 2 days, right? And then what happened? We had a origin of this impulse movement to the upside that happened and broke the structure. But what it broke, okay? It broke this high or it broke this high, okay? You have to be careful. So in this case, obviously, we broke that high, we broke that high, and even that high. So everything on the left side in this case is kind of broken, right? And the most recent high there is basically that one. You want to use that one for the possible entry point whenever price returns to the region and make a test. So what I usually do is basically quite simple. It's kind of baby pip simple, right? So let me draw a zone which is kind of the resistance turn support, if you want to call it, right? And then I mark everything. So we have a break of structure, gonna type in break of structure here. We have this high as a potential target, so we can have a target there as well. We even broke up this high, so we can use that one as well, break of structure. Now, where we can have our entry, well, usually price will come to the high that got broken or the low, but we currently have highs because we're having bullish market. Okay, usually it's going to come to this level, right? And I'm going to play your chart. I'm gonna play chart. Okay, further. Okay, so we have a first test of the high. Price collapsed to the downside, so it made retracement, pullback, if you want to call it like that. Okay, we have a first rejection, and voila, what happened, right? So let's imagine that we put our entries right there, right at this point. We can even mark it up to be more precise, like that, on this very line. Okay, stops below. Okay, first target we set, we're gonna target this high, which is 2% in this case. Let's play chart a bit further. Boom, to the T, right? So market, break and test strategy is quite simple. And the thing is that you always want to keep this confluence inside of your trading rules or trading plan. Because if you don't have a break of structure in one direction, you actually cannot know if the price is actually going to go in this direction. So if we are bullish, you want to see price breaking above previous highs, right? Push, correction, push, break of structure, correction, push, break of structure. And the same goes with the let's say if we are in bearish trend, right? So we have a structure, we break the structure to the downside, we have a test, so breaking test, continuation, we break this low, we have correction, we have a continuation, we break this low. So every time market is breaking the previous lows or previous highs, meaning that it's trending, and you always want to mark up your lows in this case, right? Most likely price is going to come to these lows, retest it, and continue with the trend like it happened there, right? Quite simple. So keep that in mind, keep it simple at all times. Guys, thank you for watching. Please subscribe if you want to see more value videos, and hit a like.